When we were originally a student discussion group called the Mises Circle at UT, and we got really interested in Bitcoin late 2012. So we spent all of our time talking about that for a while. And then we were like, well, maybe we should engage with the Bitcoin community a little bit. And we realized that, let's see, is this? Yeah. That the Bitcoin world, not a lot of people shared our opinions. We realized that the anarchist wing of the Bitcoin movement was being marginalized. People were trying to, downplay Bitcoin's anarchist roots. So we decided to create the Nakamoto Institute to keep some of these ideas alive. And we host a lot of original cypherpunk papers and some modern commentary by us. And this talk is called It's Not About the Technology, It's About the Money. One would think that would be obvious at an investors conference, so I hope it is. But, I say this because you hear the opposite meme a lot, where people say, oh, it's not about the money, it's about the technology. So there are all these goofy memes running around the Bitcoin world, and this is one that bugs me. Well, the opposite of this. And another one is blockchain tech. That's emphasizing exactly the wrong thing. It's from an investor standpoint, Bitcoin is what is important. The blockchain is a great invention because it makes Bitcoin work. And other possible applications I don't think are very interesting from an investment standpoint. And if you come to the Nakamoto Institute and start talking to us about blockchain tech, you will get bored really quickly, just so you know. The rest of the world is the exact opposite, because lots of VCs are uncomfortable talking about Bitcoin, and they say blockchain tech instead. So, oh wow, it's working now. Wait. Okay, so, well, hopefully my bullet points will appear correctly. So there are some problems viewing Bitcoin from a technological standpoint. Okay. Well, these were supposed to appear one by one, but there you go. So if it's the technology that matters, why was Bitcoin worthless for its first year? Normally when you're building a company, you're not like worth nothing at first. You're still worth something, even if it's not very much. Bitcoin was worth nothing for an entire year. Furthermore, the technological features of Bitcoin are infinitely reproducible, and people tried this a lot. Back in 2013 and 14, we had the altcoin mania going on for a while, and people thought you could just create an infinite number of currencies and somehow make money doing that, which is nonsensical. So, and finally, this is really the crux of the issue. If Bitcoin has no price, then it's useless. You can send messages to people with Bitcoin that say, I'm sending you 2,000 Bitcoins or something, but if Bitcoins are worthless, you didn't do anything. So this is why I think it is misguided to look at Bitcoin primarily from a technological standpoint. Normally, with technology, you build some invention and it's useful, and so then it's worth something and you can sell it. But Bitcoin isn't like that at all. Once Bitcoin is built, it's still worthless, right? It's still useless once it's built, until people start investing in it, and then it has a price, and then it becomes useful. So it's not like any other kind of invention in that sense. Bitcoin is useful because people invest in it, and to me, that's the important point. That's the interesting thing about Bitcoin. The technology, that's great, but that's not Bitcoin's point of failure. That's going to work. I mean, we know how to do that. That'll work. But what makes Bitcoin interesting is where the value comes from. So, right. So, Bitcoin doesn't offer dividends or interest, so it's not like a stock or a bond. And it cannot be consumed, so it's not like a commodity. And I also don't think that Bitcoin is like a precious metal either, because gold is, you don't have to convince anybody that gold is rare. It just is. It's just physically not around very much, and therefore, and it's difficult to counterfeit. So you can always use gold to as a store of value. It's always going to be something that people are going to want to display how wealthy they are for conspicuous consumption or something. Bitcoin is not like that, because when Bitcoin is first created, it doesn't mean anything to anybody, right? And it's not really very scarce. You can mine, thousands and thousands of Bitcoin at almost no cost. Bitcoin needs to develop a brand. It needs to become something special in people's minds before it is valuable. So if you are investing in Bitcoin, I don't think that you can think of it as being like a stock or bond or commodity or precious metal like gold, which technically is a kind of commodity, but it's not something that you consume very much. It's something you just, store in a safe. So there is something else like that that has value despite not being any of these things, and that is cash. So I'm going to argue that from an investment standpoint, if Bitcoin is going to be successful, it has to act like cash eventually. Oh, man. So now I'm going to talk about why cash is valuable. And this is an inherent feature of the world that we live in. There's a trade-off between being invested in some project and keeping your options open. So, a good analogy is in biology, there's the idea of a sit-and-wait predator or a pursue and chase predator. I think that's what they're called. But the idea is, do you hide in a hole and wait for something nice to come along and attack whatever it is, or do you pick out something and commit to it and chase after it until you get it? So in the investment world, you can try to build a long-term project like a new business and work on it for many years until it becomes profitable. That's like the pursuit predator. Or you can just wait for a good opportunity to come along and jump in. And this would be like if you've read the the black swan. That's Taleb's investment strategy. He likes to wait around until something goes on sale, there's a crash, then he can buy in all of the cheap stuff. Now, what would be nice is if we have a way of, if we had a good in the economy that is used for keeping your options open. And that's what cash is. The problem is that there isn't anything that is physically good at keeping options open, like because this is an inherent feature of human planning and activity. There isn't anything that is inherently going to physically cause me to have options, at least not to the extent that we might want. So holders of stocks, bonds, and commodities benefit from specific planned future outcomes, and cash holders benefit from randomness. There's always going to be someone who can't afford to stay invested and who needs to get rid of their investments. So there are always going to be some investments that are on sale. There are always limited time offers. And the person who holds cash is in a position to take advantage of these. So your decision whether to be invested or to hold cash is going to be based on which expected outcome is going to be better. So if your specific investment is going to be really good and not risky, then you might as well be more invested. Whereas if you want to benefit from randomness, then you shouldn't be too invested. The cash holder is luckier, basically. Cash makes you lucky. And that's where Bitcoin has to be if it's going to be a successful investment, ultimately. Okay, I already discussed this problem. No good is physically able to keep options open. What is this? Okay. So because I created this presentation on OpenOffice, and now I'm trying to run it on a Microsoft program, the solution doesn't seem to show up. So let's see. So this is... So, okay. So this is ridiculous. I'm sorry. We should at least have the problem available, right? Yeah. Okay. So the solution is that we pick out one particular good, and we just agree implicitly that when we want to keep options open, we go into that good. But there doesn't have to be anything special about this particular good. It's helpful if it has the qualities that are good for money, divisibility, fungibility, that sort of thing. But that is a necessary condition, but not sufficient. And people who are thinking of Bitcoin in terms of technology, they're thinking about a necessary condition for Bitcoin to be successful, but not a sufficient one. And the more important one is this implicit agreement that we're going to use the good as cash. And that's where the value comes in. Now, the more people demand this good to be used as cash for keeping their options open, the more useful it is as cash. So sounds like kind of a circular argument, but when you're assessing the value of a good, you're always thinking about future uses, whereas what it's doing now is based on what's happened in the past. So there's a positive feedback between the utility between the demand for cash and its value. And this positive feedback can cause the value to go up or down. If people are getting more and more excited about the potential cash good, then its value and its utility goes up together. So and it'll go down together if people are getting less excited. So it's not like a stock where the price will tend to move towards something related to the objective value of the company issuing it. It's more like the value of the cash is causing itself, if that makes any sense. It's like its own living thing, right? Now, this is kind of an aside, but this view of cash is really helpful for understanding business cycles. So if we are issuing a currency and we suddenly release a lot more, so there's all this extra cash running around, this creates the impression in the economy that there's somebody somewhere who is keeping options open. And consequently, most of the people in the economy feel like it's a good idea to get invested in something. And they're going to chase after a specific benefit. But there really isn't anybody in the economy who's keeping their options open, because this new money is just being created and pumped into it. And as a consequence, the people in the economy end up in lockstep with one another, and they all depend on one another to such a degree that they can't afford to allow any of their obligations to fail. So if business B depends on something from business A makes a little mistake, business B can't handle it. They can't make payroll just because one of the businesses they depend on doesn't come through. There's nobody around in the economy who's ready to take the business B off their hands, to help them get uninvested and who can make payroll. So then business B fails, and then business C, which depends on business B, they're also in lockstep, and they depend on business B. So then they fail. In physics, there's this idea called the angle of repose for granular materials, and there's a certain angle that you can have a pile of sand such that you can drop one grain onto the pile, and this can produce an avalanche of any size up to the size of the pile itself. This is kind of how the economy becomes when there is a central issuer who's creating lots of cash and making everybody think there's enough people keeping options open in it. So the nice thing about Bitcoin is that people can avoid this sort of thing. So, if Bitcoin is to be a successful investment, it needs to be valuable because it acts like cash. And the way I've argued this point is I have listed several other ways that a good can be valuable and argue that Bitcoin doesn't satisfy these. I don't know of any other thing that Bitcoin could turn into. So, but if you mention one, I'll be happy to think about it. But I think that cash is simply the remaining item. Bitcoin grows because people in the Bitcoin network profit from being in it. I think this is an important point because I think that there is a tendency for people to think of Bitcoin more like a consumer good, when in reality it is it's the profit that matters. It's not like eating a hamburger. Consumer satisfaction is important, but ultimately what matters is you get richer from being in Bitcoin. At least you should, or else Bitcoin is probably not going to work. Now, because Bitcoin is infinitely reproducible, and because it needs to have that special brand to be valuable, and because the value of the network is related to its size. By the way, when we talk about the network effect for Bitcoin, what I'm talking about is the network of human beings or intelligent AIs that are demanding Bitcoin. I'm not talking about the computer network. That's secondary. If there is a rival network, that detracts from the value of Bitcoin. There's actually, when you invest in stocks, it's often a good idea to diversify so that if one investment fails, you're taking on less risk. But with independent currencies, the opposite is true. If you diversify, you're adding more risk, and the people who create more currencies are adding more risk, because it's really just one network that ultimately will win. If you have there's just less value to be obtained if you have to work through two networks than if you just have one that connects everybody. So I think that we should judge people in the Bitcoin world based on how invested they are in Bitcoin, the currency. And dang it. Okay, sorry. So apportion your support and attention in accordance with the potential growth of the network. That's my recommendation for how to maximize your investment potential in Bitcoin. So, okay, I'm going to skip one slide. Here we go. So, companies that accept Bitcoin but don't offer a discount or hold profits in Bitcoin, I mean, it's nice to accept Bitcoin, but you're doing a lot more for Bitcoin if you offer a Bitcoin discount or if you're holding profits in Bitcoin, because then you're investing, you're adding value to the network. And I really don't like startups that aren't invested in Bitcoin. I think that if you are you should attach your success to the Bitcoin network as much as possible, and then you're my friend. And otherwise, I don't know. And altcoins are, I particularly don't like these. As I said before, they're adding risk, and I don't think they're adding value at all. So I think that you're a better Bitcoin investor if you're an anarchist, because you shouldn't serve two masters. I think you're better if you're not squeamish about saying that Bitcoin is anti-government, and I don't know how you're adding value to Bitcoin if you're joining the Bitcoin Alliance thing that just came out, because these are really important ways that people can profit from Bitcoin that are just unavailable in rival networks, or less available. This is something that we need to encourage in order to make Bitcoin a good investment. And there's my talk. Thank you very much. I hope you enjoyed. There's my Twitter, and you can contact the Nakamoto Institute through here, and that's also the website.
Fantastic. Let's give a big hand for Daniel Krawisz. Awesome stuff. Couple of questions. We can do a couple real quick if we have anybody. Julian, right here, and then Will, and we'll move quickly through these. So.
Thanks. So you said that Bitcoin is not inherently rare in one of your slides. Am I taking that out of context, or did I miss something, or do you stand by that statement?
So I use the word rare because scarce has a specific meaning in economics. But yeah, there are always just 21 million Bitcoins. But when Bitcoin was first invented, a Bitcoin had no meaning, and you could easily get tons and tons of them. So they were less scarce in the beginning than they are now. So does that clarify the question?
Yeah. I think we just had a problem with rare and scarce, but I understand what you're saying now. There is a hard limit of 21 million, and yeah, we're on the same page.
Okay.
Thank you.
Perfect. Will, I think you had a question here. So where did Will go? There you are.
So, well, to clarify further, just if you have lots of Bitcoins in the first year that Bitcoin came out, that doesn't mean anything to anybody else. It doesn't mean that you're wealthy. It doesn't mean you can't use it for conspicuous consumption. It's just a number. Whereas now, if you have lots of Bitcoins, that does mean something. Whereas I was contrasting this with gold, because you don't have to prove to anybody that it's difficult to get gold. It just inherently is, until we start mining the asteroids.
So I really like your writing a lot, and the couple talks I've seen as well. I'm wondering, I agree with your facts. I just wonder what's your take on counteracting the whole blockchain versus Bitcoin debate, or the narrative that's out there so much lately?
Oh, can you repeat the question?
So blockchain versus Bitcoin. The blockchain contingent is seemingly winning right now. How would you recommend counteracting that narrative?
Buy more Bitcoins. I mean, if you invest correctly, that's what's going to win. And I think that if you don't have, if you're not looking at the right, if you're not paying attention to the right thing, you're not going to make as much money. So I think that the people who have their eye on Bitcoin are going to eventually be richer than the people who talk about blockchain technology. So if you don't want to keep your eye on the Bitcoin, then you don't have to. But I think that's a bad way of thinking about it from an investment standpoint.
Excellent. I'll just add to that. While he does that, I'll add to that comment. Blockchain or blockchain tech really doesn't exist without the Bitcoin blockchain if you want maximum security. So when you buy Bitcoin, you automatically get a share in all these other technologies that are being built on top of it. You may not get as high as a pop if one of these particular use cases really takes off, but you also remove a whole lot of risk because many of those will fail. Some will win big, but you're holding the underlying asset that supports the whole system. So I can't agree with Daniel anymore. So thank you, Daniel, for coming out, and let's give him another big hand. Read his work at Nakamoto Institute.